Ladies and gentlemen, good morning. Thank you very much for being here. Just a few words about why not Italy. What is Why Not Italy? It is a working group we created in Berlin 3 years ago. And it has as a mission the purpose of promoting direct investments into Italy. Why in Berlin? Because in Berlin every year there is a very important worldwide conference about European private equity. And to tell you frankly, Italy every year is put at the very bottom of the list in terms of priority. So this was a sort of reaction of some individuals who are working in private equity, the Bocconi University, which is sponsoring this initiative, and also Borsa Italiana. So our mission is to promote foreign direct investments into Italy coming from all over the world. It's not an easy mission, but as we will see, there are good reasons why you should invest in Italy. And also the historic trend is not that negative in terms of industrial investments into our country. So I will try. So next slide. Okay, I don't have many slides, fortunately. So there are traditional factors why you should invest into Italy. First of all, it is one of the largest economies in the world in terms of gross domestic product, and as it was told yesterday many times, it is the second largest manufacturer in Europe. There is a very solid private finance background committed to support the real economy. It is about saving. Italians normally used to save a lot of money. Now with the crisis, it's more difficult, but again, the wealth of individual households is very important, also in terms of real estate, in terms of liquid assets, and so on. High level of human capital. This is also thanks to universities like the Bocconi. Our young talent are everywhere in the world, and I would say there is a quite dynamic top management activity. This is very important, and sometimes we forget about it. Unlike other countries, also in Europe, there is a very, very positive attitude towards foreign investors. They are seen as a key to a faster international growth and to achieve a larger scale. Italian entrepreneurs are not chauvinistic at all. Some politicians are, but the entrepreneurs, they almost always welcome foreign investments. And this has to be with our psychology. Again, we don't have a very, very strong national spirit, which has some disadvantages, but when it comes to foreign investments into our country, this is a big advantage. So they recognize the value of a foreign investors in terms of further contribution to increase the value added to a company. Stable M&A prices with no speculative bubbles, especially in industrial manufacturing and components. The IT bubble in 2000, it just lasted 9 months, and it had to do more with the stock market. Then the real estate bubble was like 2 years, no longer than this. Otherwise, as we will see in one of our next slides, prices in M&A are quite stable, with an average between 7 and 8. And again, this is very important for investors, having a framework of stable prices. Italian companies, as Stefano pointed out before, are undercapitalized, and the use of massive additional leverage is no more possible. There is a strong need for equity resources. Debt-to-equity ratio is higher than 1, as we saw, and if we deduct the goodwill from the net equity, then again, this ratio is going to be even higher. So equity is a scarce resource, is strongly needed, and many Italian entrepreneurs cannot give this liquidity to the company, so there is a strong contribution needed by foreign investors. There is a very, very large number of high-quality, export-oriented, medium-sized companies. Today, I am active in investment banking for 28 years, and again, almost every day I discover a new company in Italy, Northern Italy, Central Italy, Southern Italy, with revenues more than 50 million euro and with good profitability. So we have a huge number of quality, medium-sized companies. And this is something which is quite unique in Europe. Only Bavaria, only Baden-Württemberg can have a comparable kind of industrial background. And this is also very important. Many small and medium-sized enterprises have generational change to be faced. And again, sometimes they need a stronger shareholder to promote their expansion strategy. Next slide. These were the traditional factors. New factors, now IPO is not feasible for the great majority of Italian small and mid-sized company. So the M&A option through private equity or a strategic alliance is the most viable one to raise fresh money. Italian stock-listed companies are only 300, and they are 300 since when I started working 25 years ago. Every year you have 5, 6 IPO and 5, 6 delisting. So the general saldo is just, the general balance is 0. Why is this? This is a very long story, but again, international financial investors are not so committed on Italian small cap. So the M&A option is necessary, and it's the only which is very viable. Private equity can give a contribution, but also foreign investors can give a contribution to raise fresh money. Potential sellers' price expectations have decreased in the last 18 months, and vendors have abandoned the dream of 2005, 6, and 7 pricing. This was a golden period of Italian M&A with a maximum multiple. A great number of sellers now is ready to accept let's say, more moderate prices with earn-out payment, vendor's loan, so sharing risks with the acquirers. The number of strong domestic strategic buyers is still quite limited, and some Italian private equity funds have a fundraising issue. So a foreign investor will have much less buy-side competition. Italian companies, normally they are trying more to internationalize rather than having a consolidation strategy in our country. That's why probably for somebody coming from outside, it's much easier to be as a consolidator, to aggregate companies, and to create more competitive groups. Sometimes several private equity investment committees and strategic buyers boards are overestimating the country risk of the Italian market, and sometimes they do not pay enough attention to Italian export champions, to emerging brands. When it comes to board approval, it's not very easy for US corporates to understand our country, or also for some Asian groups and so on. And some PE strategic committees rather prefer to invest in Germany, in France, and sometimes really country risk is overestimated. Former bubbles, which again lasted a very short period of time, like real estate and alternative energies, have become excellent opportunities in secondary market for players which have cash to invest. And this is true. You will see a lot of foreign investors, especially from Asia, both in real estate and both in alternative energies. Next slide, please. Acquisition financing market is very selective, but still very open to new credible projects. We have now a new regulation for the bond market with some I will not say tax advantages, but at least the bonds are feasible now with a reasonable, convenient pricing. And this is indeed a very good window for acquisition by financing in Italian market. There are some Italian banks providing money. There are some foreign banks providing money, especially French ones. And the bond market is very active in the larger size deals. Again, we just concluded the transactions in Italy, and our client was able to raise a bond with 5 times EBITDA, a bond of 400 million, just some days ago. So the market is in a very good shape in terms of acquisition financing. Some industries, as we told before, especially tourism and leisure, lack a domestic consolidator and leave large room for foreign investors with a build-up strategy. So, based on these factors, the Italian market is indeed a buyer's market for the next 2-3 years, except perhaps for top brands, pharmaceutical, and some gyro component manufacturers, where there are good companies for sale, but who have to pay a double-digit multiples. But otherwise, apart from fashion brands, there are many components manufactured. Italy is not only, as Professor Sironi said yesterday, just brands, fashion, food. Is also high-quality components manufacturing, machinery, engineering. Our machinery companies compete every day with German competitors. So it's very, very important to know this, how good some Italian companies, apart from fashion and brands, are. About pricing, very quick. So you see a stable framework. Average 2013 was influenced by some deals in fashion and brands, which again were double-digit, but otherwise you see a quite stable trend with no bubble if you compare China or US or UK sometimes. So reasonable pricing. Next. You see 2011. I just collected the top 15 deals for 2011, 12, and 13. In 2011, as also in the following years, it is a market dominated by foreign investors. French are leading ranking, especially in food, as we see with Lactalis Parmalat, and in the fashion business, in the luxury business, as we can see from the Bulgari transactions. In 2011, Japanese came back to acquire Italian companies after many years, talking about Asia, and they also performed an asset transaction of Buongiorno.it, so in the IT market. Next. 2012, increasing role of state-owned holdings. This is an important sign. I mean, when Italian entrepreneurs are not that active in buying Italian companies, Cassa Depositi e Prestiti is replacing. So the state is taking higher shares in our economy. I believe that probably this has to be counterbalanced by more foreign investors. And this is what happened, for example, in 2013. Next slide. The fatal attraction for Italian brands and technology. This was indeed a very active year for foreign investment. You can see General Electric acquiring Avio. You can see Loro Piana. This was a deal of the years with a lot of press telling about this. You see Marazzi being sold in the ceramic industries. So you see there is a strong trend of large foreign investments into Italy. Private equity investors, they are very strong in the large size deals. In terms of small and mid-size, there is a fundraising problem, which is a problem we see every year in Berlin at the Super Return Conference. About Asia, India was very active until some years ago, acquiring components manufacturer. Now India is no more so interested in our country. We have a very strong interest from US and France. US and France are typically the normal acquirer of Italian companies. China is very interested. We had Zoomlion acquiring Chifa some years ago, and we had the Ferretti, the yacht manufacturer, bought by a Chinese group. And Japan, again, I said, there is an increasing interest. About ASEAN, there is still a high potential. A Malaysian group bought the former Fiat Lubrificanti 3 years ago. And yesterday there was a closing from Indonesia acquiring a soccer club in Milano. So leisure business is also becoming very important. So I would say there is a huge potential for foreign investors in Italy. And for Asian manufacturers who are looking for sound mid-sized Italian company, there is really some very good things to be done in our country. So I can just give you the word.